Hello everyone, welcome back to Bitcoin Not Crypto. In today's episode, I'm going to be talking about the earnings call on Microstrategy, and I'm going to explain this more in depth for people who really don't understand what's going on with Microstrategy. It's an incredibly interesting story. So before I do that, I just want to tell you about this film that I'm working on and a competition that it's in. The film is called The Land of Volcanoes in Bitcoin, and it's on a geyser fund. You can vote right now, and I'm able to win up to 500,000 Satoshis, 500,000 Satoshis. It would go a long way to help this film get made. There's a link in the description for that. So the earnings call just came out on MicroStrategy, and it was an incredible listen. It was unlike any other earnings call I've ever listened to. And the reason for that is because it got into talking about their next strategy for the next 3 years. So MicroStrategy in the next 3 years plans to raise $42 billion. They're almost a $50 billion company. So they plan to raise almost as much as their current market cap in the next 3 years. Now, how is that possible? They plan to do that in two different ways, and I'll explain those in depth as well. So 21 million of that will be through ATM offerings, which is at the market offerings, which means basically issuing shares, issuing dilutive shares. Now, this is an accretive dilution technique, unlike many other dilution events that happen. A lot of dilution events happen for basically funding operations, stock options and stock payment to employees, and also just selling into the market to raise more funds to grow as a company. Now, what they do though is they issue these stocks, they take the money that they get from selling them on the market, and they use that to buy Bitcoin. Now, 21 billion, gotta remember that's billion, not million. 21 billion of the additional capital they'll raise is through convertible bond offerings. Now, these convertible bonds, they have a really low interest rate, and that interest rate will fluctuate. Not all of this is just happening all at once. This is over the next 3 years, and they'll do this in a balanced way, and I'll explain what that means as well. But these convertible bonds are the other way they're gonna raise money. So a convertible bond is basically an interest-paying instrument, a corporate bond, and it converts into shares at a certain price. So say MicroStrategy is selling for $100 a share. These convertible bonds will come due in 3, 4, 5, whatever years at $140. So the stock has to reach that level. Otherwise, the convert basically expires worthless. The person gets back their initial investment amount, the coupon, plus whatever percentage that they make. So some of these bond offerings are 0.6%, like sub 1%, this debt offering. And the value in it is this convert. And the other value of it is that there's a guaranteed buyer. Not guaranteed in an absolute way, but the bond market is hungry for these bonds because they are the best performing bonds out there. The reason they're the best performing bonds is because MicroStrategy almost acts as like a 2 to 3 time leverage of Bitcoin. So because there's this underlying stock option in there, a lot of these convertible bonds, all of them basically that have been issued, become profitable because those, even though they're sort of in there is a call option that's out of the money, those have become in the money. So they can convert and get shares that are worth a lot of money. They can sell those shares or what have you. So all of that is to raise Bitcoin. So you kind of got to ask, okay, so there is this 1% or sub 1% percentage that MicroStrategy needs to pay the bond buyers. Now, how do they fund that? Well, they have a business, a software business that is a free cash flowing business. It creates more income than it costs to run it, and they can service debt payments with that. Now, there's also the fact that they're issuing at the money. So there's that combination, right? At the money, convertible bonds. If they have so much debt that their interest on that debt is more than the cash flowing business, that their business intelligence side of their business can service through free cash flow, they can issue at the money, and instead of buying Bitcoin with that, they can pay that debt balance down. They can pay their interest on that debt. Now, the beauty of that is the balance, right? They issue more debt, and then they balance that with issuing more at the money, or at the market, sorry. At the market, just shares. And they can still balance those at the market shares in an accretive way. So even though some of it could go towards servicing their debt interest, the majority of that will just go to buying Bitcoin. So there's a lot of catalysts as well for, for MicroStrategy. Buying $42 billion worth of extra Bitcoin and it being an accretive Bitcoin per share. So what that means basically, I've mentioned that a few times, accretive, what that means is if you buy MicroStrategy today, I mean, nothing's a guarantee, but in a year, you should, that underlying Bitcoin that is part of the share that you've bought, because the underlying Bitcoin is the part of the assets that MicroStrategy holds, the amount of that should go up because of this strategy. And in the past, if you look throughout history, they've grown the Bitcoin per share. So that's an accretive in the amount of Bitcoin that you get per share. So if they're doing this strategy, it continues to work, which there's no reason to assume that it won't, you will buy a share today and own a percentage of, or a certain amount of Bitcoin for that share, and in the future you'll own more Bitcoin with that share. That's kind of a really simple way to put it. It's all an IOU, it's a derivative of Bitcoin, all of these things should be considered. But if you contrast that with the other instrument that you can use to buy Bitcoin in a custodial way, is the ETF, right, which are wildly popular. These have an expense ratio. Even IBIT, right, the lowest kind of expense ratio on the ETFs, I think, is 0.25%. So 0.25%. Every single year, your Bitcoin per ETF share actually goes down by 0.25%. The nominal value might go up if Bitcoin increases, but you're actually getting less Bitcoin per share. Whereas with MicroStrategy, there is no expense ratio. I mean, you're paying the employees, but you have a free cash flowing business, you have a profitable business. So that's being covered, and there's no additional expense on that, and you're actually getting more Bitcoin per share. So it's really kind of valuable wrapping your head around that idea. Personally, I think this strategy, they almost have a monopoly on it. It would take another business similar to them with a large cash balance. It would basically take doing the exact strategy in the steps that they did. Sure, you could do it quicker because they kind of stumbled upon this strategy. It took a while for them to figure out that they could work the financial markets in this way and service these bond buyers in this way. Now it's an open road book, and in fact, Saylor will help other public companies do this. The issue is, will there be enough demand for you being a similar kind of product to MicroStrategy as another public company? I don't know that you'll be able to basically catch up with a similar size business, and if you have a larger business, your percentage of Bitcoin on your balance sheet will be smaller compared to the other operations of your business, therefore not providing as much volatility, therefore not being as liquid in the options market, therefore not being able to do the same financial strategy of issuing these convertible bonds and really using the leverage of the Bitcoin the open interest, or the implied volatility, not open interest, the implied volatility of Bitcoin, really elevating that and increasing this and creating this extremely volatile product. So although other businesses have, like MetaPlanet has done this, right? And what they've done, how they started, is they used their cash balance to buy Bitcoin. They then got a loan at a corporate rate, so lower than maybe what we could get, and they bought Bitcoin with that. They will increase the volatility of their stock to a point where they'll be able to issue options, and they'll be able to do convertible bonds at the market dilution, but an accretive dilution as well by buying Bitcoin with that money that's been raised by selling shares. They're kind of at the earlier steps of what MicroStrategy is currently doing. They are the best performing stock on the Japanese stock market. MicroStrategy has a near monopoly on this strategy. Others will kind of try. Others will have varying degrees of success. You'll be able to kind of play the other ones as more of a run-up of price appreciation. But MicroStrategy will be a lot more reliable because it is proven that it can continue to do this. There are also many other catalysts on the horizon for MicroStrategy. One is that they haven't adopted FASB accounting rules, which basically, prior to the accounting change, you have to document every loss that you have with Bitcoin based on the share price, or the Bitcoin price that you buy it at. And you can't, if that Bitcoin goes up, you can't account for that in your accounting statements. So to the public, this is very confusing, and on just the underlying real base metrics that a lot of people trade on, a lot of algos trade on, which is earnings per share and basically quarterly revenues. These metrics look lame in comparison to how they'll look with the new accounting rules, because of how much Bitcoin has appreciated since they bought it and how it continues to appreciate. So that's a huge catalyst. The other catalyst is that they are basically growing in market cap, and they are in ETFs already. So these index ETFs, like they're in a QQQ style ETF. They're not in the big one yet. They're not in S&P. They're in the Russell 1000, which is different than the Russell 2000. So they're in a bunch of these sort of passive index funds, and as their market cap increases, it forces the ETF issuers to buy more shares. So it's this reflexive flywheel, which is a term that comes out, but basically, as they buy more Bitcoin, as their Bitcoin per share increases, as their market cap increases, it forces their market cap to increase more because of all this passive buying. Basically, once they adopt these fair accounting rules, they will also be eligible for the S&P 500, which is the biggest ETF out there for passive funds, and that will increase the amount of shares being bought, which will increase their market cap, which will allow them to issue more shares, more at the money, higher at, further away debt instruments at lower rates, and will just allow them to do this strategy even more efficiently, which means their value will go up even more. So it's this crazy, like, where is the flaw in this, like, reflexive flywheel glitch of basically financial instruments to short the dollar and long Bitcoin? Where is the flaw in this? And it's very difficult to see it. You can think maybe main character syndrome, where it all kind of hinges on Michael Saylor, although it doesn't really. I mean, this strategy could play out without him. He's just a chairman. He's not the CEO. He's, very popular and very prominent talking about this, and that definitely adds a lot of value to it. So if he was to die suddenly, the market cap would get hit, but MicroStrategy would probably just continue doing what they're doing. So in the long run, I think it would be okay. I talked about competition. It's just hard to see any other competition. Is it the fastest horse in the race? Would you be better just buying Bitcoin underlying? Well, kind of not really, most likely. Okay, so the other thing is, will MicroStrategy be margin called? Say there's a huge disaster in the world, Bitcoin software messes up, I don't know, something crazy. Quantum computing gets enough to break cryptography, and the only downside to that is that they bust Bitcoin's cryptography, not the national defense or banks all around the world. They only go after Bitcoin, right? As if. Will they be margin called, basically, if Bitcoin goes down too much, which allows the price to go down too much? Well, they have a lot of assets. They have a lot of ability to issue at the market shares. They could dilute shareholders. Yes, that would increase the price going down, but they would raise capital by that and be able to stay above solvency. And they would be able to ride out that bear market. And really, like, this is what's so interesting about MicroStrategy. You cannot believe in MicroStrategy unless you believe in Bitcoin. And believing in Bitcoin, there are few. And understanding Bitcoin, there's even less. So believing in MicroStrategy and understanding MicroStrategy, there'll be even less. And there'll be a different subsect of people. People will believe in MicroStrategy if they're more TradFi, and they'll just kind of think, okay, well, he's found out some kind of glitch. His stock is up 440%. Maybe it'll keep going up on momentum. It's doing this Bitcoin thing. Okay, Bitcoin is kind of like gold, so he's trading a weaker currency for a better currency. Okay, I've wrapped my head around it enough to do a trade or to invest something. So it'll attract a different audience, but I do think that fundamentally you need to understand Bitcoin to understand MicroStrategy. And we are still early on both those things. So I think there's a huge potential, personally, that MicroStrategy becomes, maybe not the next, but it will become a $1 trillion company, in my opinion. And of course, none of this is financial advice. I'm just a guy sitting on a beach talking about my own strategy. There's a lot of interest in the option market of MicroStrategy, which when you buy an option, it incentivizes basically a market maker to hold 100 underlying shares. 100 underlying shares, it's not going to directly move the market exactly, but it's part of the larger amount that will move markets. So this is just ripe for, as I've talked in the past, a gamma squeeze, potentially kind of like a slow, short squeeze, maybe a long squeeze people talk about. This is just quite an interesting scenario we have, and something that I am personally involved in. Now, I did talk, and I'll wrap this up, I did talk about how when you buy MicroStrategy, you're buying a derivative of Bitcoin, and this is true. And I think that you should probably not own MicroStrategy unless you are kind of forced to, in a way, right? Like, you want to hop on the fastest horse. And for me, I own MicroStrategy only because I have money tied up in registered accounts. If I didn't, I would own Bitcoin with that. And the reason I would own Bitcoin is because of the other advantages. It might not appreciate as much as MicroStrategy. It's a little less volatile, so I kind of have to worry about it a little bit less in that way. I know volatility is vitality, but Bitcoin in self-storage, in cold storage, in sovereign ownership has additional value to it. It's not a share that is controlled by somebody else, and it is a real asset. It is a bearer instrument of value, and it can't be taken away from you, and it can travel with you, and you can transact with it. I mean, Bitcoin is incredibly useful, and it's the same. Right now, it's most used as a store of value, as a savings mechanism. And the best way to do that, of course, is to take self-custody, because if you're holding that on an exchange, you might as well be owning MicroStrategy, because you're entrusting that it's become an IOU, basically. So I have partnered with the company Bitcoin Well, which is a non-custodial platform. What that means is when you send money, you can send money through e-transfer, wire transfer, all sorts of different ways. When you send cash dollars to them, they send you Bitcoin on-chain or Lightning directly. They never hold it for you. So there's no counterparty risk of an exchange failure, of getting locked out away from your Bitcoin, because it can go directly to your cold wallet. They have the lowest fees in Canada. They're available in Canada and the US. And they also have, I believe, the lowest fees for ATMs. And they allow a lot of private ways to buy non-KYC. So it's just a fabulous company. I buy basically all my Bitcoin from them personally. And I'm going to do a tutorial on how to buy Bitcoin through them. A link is in the description for that. The other thing I want to mention, this isn't a sponsorship, but this is really important if you want to get into this scene, if you want to learn about Bitcoin. I have a Discord down below, and you can go on there. There'll be information about how to use Bitcoin well. You can talk with other people that are interested in Bitcoin, interested in MicroStrategy. There's different channels. The one channel on there that's incredibly interesting if you're new to this is booking a one-on-one call with me. A 15 to 30 minute call, no charge, absolutely free. We'll do it over Zoom, and you can ask me any questions. You can get help using Bitcoin well, information about cold storage, my opinions on things. We'll just have a private conversation, absolutely at no charge. This is just a service I want to offer to help people. You know, Bitcoin is a network, so I want to build that network, and I think I can do that personally through this Discord and through these one-on-one calls. So book a call down below through the Discord, join up, and we'll see you there. Thanks everybody, and we'll see you on the next one.